Okay, our pump is continuing. Not on Bitcoin so much, although Bitcoin is higher than where we left it yesterday. 30,627 is what I see on my screen. But look at what's going on with altcoins, and specifically altcoins we've been talking about. Look at Injective Protocol. In fact, let's get a chart of Injective. You've got Injective Protocol at $8.36. We've just had another green candle. But it's a green day all around. And I guess no matter who you are now you got to acknowledge and you got to respect the pump. But is this pump going to end soon? Is this pump going to continue with an altcoin pump? And if it does, is it going to mimic the 2019 scenario where we now go up 1,000%? And if it does go up another 1,000%, are you positioned in the right tokens? That is what today's show is about. It's going to be a big show, lots of fun, lots of brains of the show, also billionaires on the show today. So lots to talk about. Let's get the show on the road.
Get the fuck out of bed, bitch, go. Get up, and get the guy go. Time to wake up, bitch, get up. Get up, get up.
All right, wakey, rise and shine. If you're with us, remember to let us know that you're here and say present when I call your name. Jerry, Helen, are you here? Say present. Shane, if you're here, say present. Deadhead, if you're here, say present. James, are you here?
Present.
All right, let's see. Abishal, are you here?
Present.
Present. All right, Robert, are you here?
Present.
Santiago, are you here?
Present.
All right, so all our guests are here. Everyone's present. Everyone's in class. Listen, if you're new to our channel, subscribe to our channel. If you are one of the regulars, welcome back, guys. It's going to be another huge banter show today. It's Friday. Remember, our Friday banters, before we get into all the alpha, are brought to you by NordVPN. If you don't already have a VPN, get yourself a VPN, because these days, if you are in crypto, you want to be hiding your IP address. You don't want hackers, people, DeFi protocols, exchanges, knowing where you're at. And one way to be completely anonymous is to get a VPN. And there's a referral link at the bottom of this video. If you click on that referral link, you get to support NordVPN, who of course bring us these Friday banters. And I think you pay $3 a month to protect your crypto. Seriously. If you're not willing to pay $3 a month to protect your crypto, you're in the wrong class. You shouldn't be here. Anyway, let's get into the meat and potatoes of the show today. And if you haven't already liked this video, obliterate that like button. And especially if you respect the pump, because we do have the pump, as I can see here. And I mean, kudos to us as a community. We called this pump spot on. Someone says my sound is not right. Is my sound not right? No, my sound is perfect, man. What are you talking about? Yeah, we called this pump. I mean, kudos to us. We did call this pump all the way up from $17,000. And I told you guys, we got to respect the pump. It's like, as I said to you, when you go to a party and you arrive at a party on a Friday afternoon and you're planning on spending the whole weekend at the party, and you arrive there and the music starts playing, you don't ask what time on Sunday will the music switch off. You get onto the dance floor and you start dancing, and that's what we're going to do. Now that the music is on, we're going to talk about what we should be doing, not worrying about when the pump is going to end. When the pump looks like it's going to end, we'll talk about what time the music is going to switch off. But for now, it's about respecting the pump. And so we've got to talk about what's happening with Bitcoin. We've got to talk about what's happening with ETH, because as I said to you guys earlier this week, I did think that the ETH Shanghai upgrade was going to play out something like this, where I think I said, let me just quickly go back to what I said. I think staking withdrawals are going to be slower than expected. I think the LSD protocols are going to drop as people realize that the main reason people use them was for the liquid token. And I did say that ETH was going to start running and alt season was going to start, and that would take ETH BTC down and Bitcoin dominance down. So far, it's playing out. But look, we are only 2 days after the ETH Shanghai upgrade. We're getting altcoins looking like this. Look at these altcoin movements. Look at Injective, $8.43 now, flying. We're going to talk to our panel about that. look at the Bitcoin dominance, 47.82. It was at 49. You got the ETH BTC chart breaking out. There it is. So is this going to carry on? Is this not going to carry on? That's what I'm going to start talking about today. Was ETH Shanghai upgrade the big catalyst? I'm going to bring in our Banter Friday guests, someone new, some are old friends. We got 𝗍𝗏𝗃, we got Rob, and we got Santiago. Guys, nice to have you on Banter.
Good to see you, man.
Yeah.
Yeah, it's good to be here.
It's nice to be here when the markets are pumping like the markets are pumping now. And I think if you've been here for so long, I almost feel like we deserve the pump. You know, like it's like we went through FTX, we went through Luna, we went through Celsius, we went through 𝗃𝗏𝗄𝐻, we went through everything else. And now like we're finally getting like a little bit of oxygen back into our lungs. And it feels so nice, right?
I'll say hell yeah. I mean, Ether deserves it. I think, where we're at now with Ether, it is successfully migrated to being fully proof of stake. You could say that there's been a lot of different milestones along the way, but with the Shanghai upgrade, Ether has fully completed its transition to proof of stake and has demonstrated that it was able to go through some massive technical challenges successfully and without issue. I think the response to it has surprised a lot of people. Withdrawals are far lower than most people anticipated. There hasn't been this mass, unstaking that some people speculated could occur. And, any challenge ahead of Ethereum looks trivial in comparison to what it just completed. So, I think, there's a lot of optimism out there seeing how successful and smooth this upgrade went.
Look, I must agree with you. I think when they were talking about the ETH merge and the move from proof of work to proof of stake, I said that's probably one of the biggest technological challenges of our generation. And specifically, why do I say that? Because it's not like you're talking about a centralized system with centralized coordination. You're talking about a decentralized world where they literally migrated a system from one fundamental system to another fundamental system while keeping the plane flying in the air. And I think this week was, as you say, it was a huge milestone. It's the real merge from proof of work to proof of stake now completely complete. And it does give you a lot of confidence in what the developers at Ethereum can and can't do. Let's quickly just go through. You mentioned that withdrawals were much lower than expected. It is something that I've predicted. I actually said, I did, as I said, showed you earlier, I did have a tweet that day. But is this a real reflection of what we can expect going forward? Do you think that like there are not going to be that many withdrawals? Do you think that people like Kraken, who were forced to withdraw, have started withdrawing because of their settlement with the SEC? I mean, do you think that this is, how do you guys see the future of e-staking? Do you see it as do you see this line here going up or down? I think maybe let me send that question to 𝗍𝗏𝗃.
Well, a couple thoughts. So big plus one, everything everybody's saying. I think it's so impressive that this is almost a non-event. I think if you go back 2 years, ETH shipping something like this there would have been FUD everywhere. I think people would have been scared, like, is it going to crash? Is the network going to go down? It's just, from a technical perspective, it's very impressive. I think that the community and ETH Core and Foundation and everybody's gotten to this point where you can just ship stuff like this and it becomes essentially a non-event. And I think that's very impressive. In terms of what happens with the staking percentages, I suspect that now that it's shipped and de-risked, I wouldn't be surprised to actually see it go up. Like, I think there's all these people that are sort of waiting for this to happen and get technically de-risked. And now that's happened, you can imagine, I think, actually more inflow than outflow. How that sort of stabilizes or where that stabilizes or how that kind of oscillates, I think we'll have to see. Because you could also imagine, the market participants change over time. And so the people that are here now in this market, in this climate, generally are the long-term believers. Like, it's hard to have held your crypto for the last 2 years. And if you're still here, there's probably a reason. That's probably going to change over the next 2, 3, 4 years. And so I wouldn't be surprised if you see actually some pretty big swings over the next couple of years in terms of the percentage of ETH that's locked up, just because the market participants are going to change a lot.
Just walk me through my thinking here, because I want to see if my thinking is correct here. So you staked your ETH for a period, and the period could have been as long as 2 years with no option to withdraw the ETH. During this period, you were earning staking rewards for doing that. At the same time, we had the liquid staking protocols spring up during this period. And they provided an opportunity for investors who didn't have 32 ETH to spin up their own validator nodes to be able to stake and also get a liquid derivative of their investment, which they could then borrow against, trade against, liquidate, etc. Now the merge has happened. And the way I see it, there's two classes of investors, or two classes of let's call them investors. One is the investor that has 32 plus ETH, big institutions, let's call them whales for bigger investors. And they are now faced with a choice of either staking their ETH on their own or going through a liquid staking protocol, right? What is the thesis for them to go through a liquid staking protocol? And the reason why I asked that is I predicted that the withdrawals would be lower than expected. I predict that some of the bigger funds that ordinarily wouldn't have staked because they wouldn't want to lock up their actual ETH because that's not part of their fund strategy without the ability to be liquid, they could now stake ETH because, hey, now we can stake. But my question is, what happens to these liquid staking protocols? What is the use for these big investors with a liquid staking protocol, given the fact that they can just go and stake by themselves and not give up some of their profits, so to speak?
Well, I think for anyone who's capable of staking directly, they're not going to need a liquid staking derivative or a liquid staking protocol. They're just not. But the majority of Ether participants and owners aren't technically capable enough or want to go through the hurdles to stake directly on the blockchain. So I think whether it's a liquid staking derivative / protocol or a cie staking product like Coinbase or Kraken or whatever, or Binance or whatever you have it, I think most people are going to still prefer, especially individuals, the easy route to earning the Ether yield by acting as a validator. They're not going to go through it themselves. If you are a massive institution, you can just hire the team necessary to stake. But anything less than building out the staking mechanism yourself, you're better off using a product that's been built for you. And I think they're going to remain popular. I think they're going to become increasingly popular over time. When I look at the aggregate Ethereum staking market, there's somewhere between 17 and 18 million Ether that are staked. Long term, I see this going closer towards 100 million. Almost all Ether will at some point be participating in validation. It's almost nonsensical for Ether not to be participating. And so over time, I think the aggregate market of how much Ether is staked is going to 5x or so. And so, there's going to be a lot of room for liquid staking protocols to grow. There's going to be a lot of room for CeFi / centralized, staking products to grow. And there's going to be a huge amount of growth in direct staking. And all of it is going to be increasing.
Santiago, what do you think? What's the thesis for the liquid staking protocols? I almost felt like after the withdrawals would be open, it felt to me like a lot of people would just abandon the liquid staking protocols and just go straight to the staking on the chain themselves.
No, I would agree with Robert. I mean, you need to be technically very savvy, right? Because if you get slashed, that has a pretty big risk, right? You need to constantly be monitoring your validator, make sure that your uptime's correct and you're setting it up correctly. And it's the same reason why people use centralized exchanges. Like, you would argue that people should, at this point, 100% should be like, self-custody, but that's never the case because people value convenience. And so, look, as it stands, you have roughly 33% of staked ETH with liquid staking derivatives. The lion's share of that, roughly 75% of it's for 𝗏𝗏. I just think they have great credibility in the space. They've been doing this for a while. And so at the end of the day, you could argue that as more institutional players come into the mix, like, are they going to go through Bison Trails, which Coinbase acquired? And then you're probably going to see that, perhaps share of the staked ETH gravitate away from liquid staking derivatives towards maybe just kind of individual validators. But I don't think that's going to change materially over the next 12, 18 months, candidly.
So look, interestingly enough, when this run was very much a Bitcoin run or a Bitcoin-led run until the day of the Shanghai upgrade, and then the ETH BTC chart changed in favor of ETH. Now, I know that a lot of the Bitcoin maxis were celebrating the fact that the ETH BTC chart hasn't done anything in a couple of years. And it almost seemed coincidental that it happened at the Shanghai upgrade. Why do you think that on the day of the Shanghai upgrade, this thing turned? Like was it coincidental? Did something change fundamentally with ETH? I don't get it.
I mean, the market's finally realizing and pricing in the merge. I mean, as Robert was saying earlier, I mean, finally people say, wow, okay, these guys have credibly executed on the full transition to proof of stake. And
was there a risk before last week that they wouldn't be able to execute after all the test nets and I mean, was there a real risk that ETH wasn't going to execute this?
Sometimes you got to prove it to people. There's a lot of disbelief out there. Sometimes, you just got to show them when it's working.
Well, I think the testnets, I always think of testnet as like you're playing poker with potato chips. It's like the dynamics are real when you have real money involved. And so I think there's, nothing moving from testnet to mainnet is riskless, no matter how much you've tested. So I can get why people are a little bit worried about it. Ron, I want to go back to one thing though. I think I agree with everything these guys have said so far in terms of like why there's kind of like three categories of people, right? There's the people that are really technically competent and they want to run their own validators. Maybe that's a business they're running. Maybe they're paranoid and they don't want any counterparty risk. They don't want any smart contract risk. And so they're going to do it themselves. I think there's the bulk of people that's retail. They're just going to go through some cie entity, right? Like a Coinbase or something like that, because it's complicated. You don't want to deal with it. You don't want to think about your taxes. Like you're going to get some form at the end of the year. They're just going to calculate it for you. And then I think for the liquid staking, I think those are, there are a lot of professionals that will actually use that, like people who have a lot of ETH, because the reusability of the token that you get inside DeFi is a pretty powerful second order effect, right? So when you put it down, the ability to use, Lido or Frax tokens and then go use them in DeFi as collateral is pretty powerful. And I think some of these protocols like Lido and Frax have done a really great job of getting integrated into the ecosystem such that you can actually go take that token and go do additional things with it and make it even more productive and generate even more yield if you want. And by the way, as always, not financial advice, so I'm not saying anybody should go do this, but I think that's pretty powerful, right? The ability to further productively use that asset as collateral in the DeFi ecosystem is a pretty powerful driver of usage.
Yeah, so the advantage is actually in the liquid, in the derivative token that you can go and borrow against, that you can use as collateral, that you can use for other business activities.
Yeah, exactly.
All right, so up until now, this run was very much a Bitcoin-led run. A lot of the maximalists were celebrating Bitcoin dominance going up to 49%. Now it looks like the altcoins have started running. The dominance has started to come down. For those of us who've been here for many cycles, we know that this always happens in every cycle. Do you think that we're now at the part of the cycle where Bitcoin's had a run and now altcoins will start following, or do you think that this is just a small little glitch and it's going to be a Bitcoin only run? Rob, I'm going to start with you.
Sure. Well, I'll say, I don't think it's going to be a Bitcoin only run. I mean, there's so many assets out there that are differentiated and unique. I think, if you look at it as like a huge landscape of assets, like some are going to outperform Bitcoin over the next weeks, months, years. Bitcoin is, in my mind, the best index or beta asset there is that just represents crypto as a whole, but it's not everything. And I think that there's going to be a lot of activity, good and bad, from, thousands of assets.
I think one way to think about this, Ron, is I stole this from a friend of mine who's much smarter than me, and used to work in government. He was very senior in government, and so I like this coming from him. He thinks about Bitcoin as basically a measure of government irresponsibility. So the more irresponsible the Fed and the government are being, the more likely people are to want to have exposure to Bitcoin. And I actually think that puts it in sort of a slightly different category than a lot of other crypto. And a lot of the other crypto assets, and I think ETH is somewhere in the middle. Like I think there's sort of a set of true believers, and this is a new economic system, and I'm exiting the current system, and this is a better system for me. And so I think ETH is sort of moving there, but it's not quite in the same category as Bitcoin from like an institutional perspective. If you just go to Wall Street people and you talk to them about it, and then there's the rest of crypto, and that behaves a lot more like venture assets. Those are really like people saying that 5-10 years from now, these things are going to be tremendously valuable. And so I actually think you have to look at these movements a little bit through the lens of where where is the liquidity coming from? Like who's choosing to put money towards this? And my read on a lot of the Bitcoin moves was it happens to have been correlated with a lot of the bank stuff that was happening, which I don't think is a coincidence, because if you look at it through the lens of government irresponsibility, then actually a lot of the Bitcoin movements in the last 3 months, I think, have been actually correlated with basically government irresponsibility. So to me, what the market is actually saying here is less about crypto and is more about people are worried that kind of where we are from a government and Fed perspective is not a great place to be.
But if I'm worried about where we are from a government and Fed perspective, then theoretically I shouldn't have an appetite to invest in venture assets, right? Like,
correct.
You don't invest in venture assets, but I do see the altcoin starting to run all of a sudden because Bitcoin has gone up. So like that's the part that confuses me. I get the fact that Bitcoin went up because of maybe the bank failure, maybe interest rates going up too fast, too quickly, maybe even because of what 𝗏𝗏𝗍 did. Like maybe 𝗏𝗏𝗍 was a huge, maybe 𝗏𝗏𝗍's $2 million campaign was the best marketing campaign we've had for Bitcoin ever. Like maybe, but on that logic.
Well, I think the other thing that's happening in parallel is that the stock market is running, right? And so you just look at where the S&P is, and so I think broadly speaking, there's this sense that, and you markets tend to do this, right? And again, not advising anybody to do anything, but if you just look at market pricing and Fed cuts, I think a lot of the on the equity side of the house, people are looking at the world and saying the economy is not in great shape, at least in the US, and in most parts of the world, it's actually much worse. The Fed has to stop hiking. There's going to be a pivot. The market's pricing in Fed rate cuts by the end of the year. And so the market is essentially in this game of chicken with the Fed, right? Everybody's saying, look, the economy is way worse and the Fed is not admitting it. Hence they're acting irresponsibly. And therefore they're going to have to start cutting because the economy is way worse than everybody thinks. And when they start cutting, stock market goes up. That's sort of like the 𝗍𝗍𝗃𝗃, like Fed cuts rates, stocks go up. And so stocks have gone up and everything that is venture-like has gone up in the short term. But just because Bitcoin and these other things are going up, they could be going up for different reasons. That's at least my read on it, is like they're actually going up for slightly different reasons.
Do you agree with me that the inflation problem is a historical problem now? Like, you're looking at the rate of decline in inflation. I tweeted this. I tweeted something the other day where I showed like this is the biggest decline in inflation. We had a 17% drop in inflation month on month. We went from 6% to 5%. If we carry on like this, we could be at 3.5% by June. And then like, okay, cool. That narrative's finished. And then we move to a new narrative, which is, okay, now we're going to recession. Now it's a recession.
Exactly.
The new narrative must be, are we in recession? Or are we not in recession? Right?
Yeah. I think in some sense the narrative, like there's always some meta, right? And like I think the meta last year was all about the interest rates, and I think this year it's going to be all about recession, and that's just what's going to be in the water. On the interest rate thing, I by the way, I'm not a macro expert by any means. Happen to have talked to some who are legitimately, and I think a lot of people do think interest rates are going to come down. The big question that I keep hearing debated by the people who are the experts is, okay, well, if it goes down to 3.5, like you said, very plausible. But the Fed has stated that they want to get it down to 2. And so are they going to be sticklers for that? Like, are they just going to say, no, it has to get to 2? Well, over what time horizon? Does that need to be over the next 6 months? Does that need to be over the next 2 years? And what action do they take to try to get it there? And then on the other side, to your point, does the market just say, meh, like 3.5 is good. Like, I'm okay with 3.5, and nobody really cares that it goes to 2. And that's going to be a little bit of tension in the market, because if like the Fed says, no, when we said 2, we really meant it. This is an issue of our credibility. We're getting to 2. What do they need to do? What kind of liquidity do they have to suck out of the system? What are the knock-on effects for credit, right? And if banks stop lending money, what happens in the real economy? And then you get into recession territory, right? And then how bad is the recession? So I think everybody's on the same page. It's getting to 3.5, but does it get to 2? And what are the consequences of it staying at 3.5 and people saying it needs to get to 2? That I think is like the open question. And what does that mean for how bad a recession will be? But I think everybody's on the same page that it's going to fall from here.
I mean, we can pontificate about macro all the time. I don't think anyone really has nailed macro consistently.
Correct.
But I just like to look back, like historically, okay, if you look like what the internet did over the 90s, and then like you went through 99, there's a huge crash. And then from 2000 onwards, people were really dismissive of the internet. And then you had micro events of like economic crises along the way. But like, if you really zoom out, like you ask, okay, why is crypto rallying? Yeah, you could like there's a lot of signal, there's a lot of noise in the near term, but like by and large, I do think that historically, like folks are all throughout this period, since the Fed started raising rates a little over a year ago, like there was not like you saw a lot of corporations really interested in NFTs. That kind of hasn't really gone away. There is positive signaling in how the courts are now kind of like, if you look at the XRP case, you look at the Grayscale case, like we're going to come at least, I think people are starting to realize there will be some regulatory clarity over the next like 12, 18 months, which whatever it is still positive because we've been in this kind of like dynamic where we haven't had regulatory clarity. And you have to think how many people are on the sidelines because they just need clarity. And I think there's a lot of like corporations that want to get involved. There's a lot of institutional investors that want to get involved, but they need clarity, right? And so I think if you start to like, there's a lot of things in crypto that I think are lining up, including Ethereum transition to proof of stake. You have account abstraction. I think how much does the market kind of understand that? It's hard to say like individually if they truly understand all that, but collectively, I think people are coming to terms. Look, this asset class, was kind of like a leading indicator before the stock market really came down last year. And I think in this case, it probably leads a recovery. Are we going to be in like an economic recession later this year? Who knows, right? But I do think that, I mean, the market, a lot of these crypto assets are down substantially. And so people are just maybe recalibrating a little bit, right? There was a lot of stable coins. A lot of funds held a ton of stable coins and went to cash, right? Because of Terra, because of FTX. And they're slowly kind of catching up and entering the market, I think.
You know, I actually saw a data point. Exactly to that effect. Here it is. It's the stable coins flowing back into Bitcoin. So that, I mean, you're seeing all these stable coins which were sitting on the side actually now being redeployed. Look at this. Look at the changer. So you're seeing the stable coins. So it just shows that as the market goes up, people are getting more and more confidence. As they're getting more and more confidence, more stable coins are being deployed. As the stable coins are being deployed, the market's going up. And people are starting to take leverage bets again. I want to go back to the Ethereum discussion. I tried to avoid macro. Somehow we got into macro. I think it was Avishal's fault.
My bad.
I want to go back to Ethereum. And the layer ones have been, what's the word? Neglected. If you look at like Solana, you look at Near, Cardano, they've all been like neglected. Like they've been like neglected. No one's been paying attention to them. Everyone's been paying attention to the ETH layer 2s. We had the optimism hype, and then we had the Arbitrum hype, and then they went and messed the whole thing up with a bad vote at the foundation. And it seems like now the Koreans have rediscovered their love for Arbitrum, and you see volume on Upbit going crazy, and now Arbitrum's at 154. What happens to this landscape going forward? You've just had the Ethereum devs pull off, as we said, the biggest tech success that I could even imagine. Then you've got the layer 2s, which are actually performing really well. If you look at like the transaction throughputs on the layer 2s, the transaction throughputs on the layer 2s are actually really good. What happens to the other layer 1 race? Because it seems like the market's, I don't want to say forgotten about them, but like no one talks about Solana anymore. No one talks about Near anymore. No one talks about all those. That was the talk of the town 6 months ago. What happens? How does this thing play out? Robert, I'm going to look at you because I know that you're very much an ETH. You're an ETH guy. Tell me what happens. Tell me what happens later to things like Solana and Near and other blockchain protocols. Is it an ETH and a whole lot of layer 2s, or are there going to be other layer 1s? Who are the other layer 1s? Who wins? Walk me through this.
Yeah, so I look at it from a really macro perspective. From a really macro perspective, there's not enough extremely popular applications running on blockchains for there to be a move away from Ethereum onto a lot of other L1s yet. At the end of the day, activity comes from applications. And, in 10 years, there's going to be so many popular and successful applications that it's not all going to fit on Ethereum. And you're going to have huge amounts of activity.
Even on L2s, even on Arbitrum and Optimism and ZK Sync.
It's possible it all goes to L2s, but L2s are also like this weird user experience fragmentation where the assets live up there. And, it's still pretty difficult to talk to other chains and other L2s. And L2 doesn't solve everything, in my opinion. So I think it's actually too early to see where all of the extra usage has to go, whether it's an L2 or whether it's a different L1. I almost think that like this conversation is like going to become more and more relevant over time, but we're just not there yet. It's not like, you know, you can't deploy onto Ethereum. You can easily deploy onto Ethereum, right? When, you know, everyone in the world is using a blockchain without even knowing it, and there's like these massively popular applications, they're not all going to fit in one place just through, you know, bandwidth and throughput, no matter how optimistic anyone is about any of these systems. And so then it's all going to move to pick your blockchain, Solana, Near, Avalanche.
We're going to talk about picking the blockchain in a second, but before that, do you think that Arbitrum did serious damage with their vote that wasn't a vote, that was a vote, that kind of wasn't a vote, it was a confirmation, or what they came up with a very fancy word. It was a ratification. It was a ratification of the thing.
I do think they did some temporary damage because, you know, L2s are extremely centralized still in the way that Arbitrum and other L2s work. They are. Like, the reality is, you know, they're basically running a sequencer, and, you know, it's still unfortunately very centralized. And I think it was just demonstrated that they haven't actually handed off control yet, even though they've implemented some really cool innovations in governance and like what they're empowering token holders to do. I think it's just a really bad growing pain that shows they haven't taken the training wheels off at all by basically saying like, hey, we, you know, aren't even listening to the token holders necessarily. We just went and did this thing. So temporarily bad. I think it's going to force them to have a much better governance process going forward. And it's probably like good for them long term to have such a very public fuck up so fast and so early. And
do you think that L2s can ever be really decentralized? Like, I know L1s can start off or centralized, and then over time, even Ethereum, you could argue, and Bitcoin, you could argue, were centralized and then became decentralized over time. When I look at the layer 2 landscape, it's not like that. I mean, the layer 2s today are actually just big corporations with dark governance models. I mean, we've just seen that. Do you think that there's a world, I don't know, years down the line where the L1s are decentralized and then the L2s are decentralized on top of the L1s?
Well, right now, I mean, you can look at all of this. Like, L1s are extremely decentralized. It doesn't take that many, you know, validators or nodes or miners or whatever to make a system that's genuinely like really distributed, right? Like, all the L1s in a lot of ways are extremely decentralized. Maybe not in terms of like how new code is written, but in terms of like how it runs. You can kill like, you know, the company over, you know, that originally built it, and the thing works still, right? And like, you know, L2s aren't like that because not yet.
Do you think that they do become that decentralized?
Yeah, absolutely. Yeah, I think it's one of the more important problems that Robert's highlighting is that centralization risk, especially at the sequencer layer. But there are teams that are essentially at the productionization of some really compelling research. Teams like Espresso, Astria over in the Cosmos ecosystem. Arguably, the Flashbots guys might move in this direction too, where you can actually decentralize the sequencer layer. And at that point, at least technically speaking, you know, there's sort of the DAO governance piece, which is in parallel. But technically speaking, the sequencer is not run by one corporation at that point. The entity that created it is running one of, you know, hundreds or thousands of sequencers. And at that point, it is decentralized in the way that the layer 1s are. So technically, it's possible to do this now, and a lot of the L2s are having these conversations with teams like, you know, Espresso or Astria.
Okay. Okay. So let's just break it down. If you were a fund manager and your fund management thesis was that you had to invest in either L1 or either ETH plus L2 or other L1.
Yeah.
How would you break your capital between ETH plus L2 in one bucket and other L1? What percentage of your capital would you allocate to ETH plus L2, and what percentage would you allocate to alternative layer 1 blockchains?
Santiago, you're a fund manager.
I used to be. Now I remain.
Now it's just a shit poster.
None of this legal.
Now he's just a shit poster.
I still use the same disclosures when I was a pair 5. I'm not a professional shit poster, but probably 80-20 or 90-10. Like, I just think continue to look. The Avicho guy, you guys, electric guys track developer ecosystems really nicely, and they put out a great report. I think that's going to become, to me, that's the primary metric. And I just haven't seen, to Robert's point, that many use cases and teams be compelled to build elsewhere? Sure, there's the Aptos, which I'm an investor. Like, I've invested in other L1s as a hedge in case Ethereum loses dominance. But I just think particularly now after this upgrade, it's hard to just invest elsewhere. And if you're a team, a lot of the conversations that I have with early stage teams, they're just going to build on an L2.
Okay.
Even
So
in a
what's your
I'll
final number?
I'll take those.
my final number is like 90-10, like ETH plus L2s, probably 80 to 90% of my allocation.
𝗙𝗿𝗶𝗃, what's the number?
I can't give numbers here, but just my compliance in GC will kill me. But I think the way to think about it,
not 𝗙𝗿𝗊𝗇 the company.
well, I think more meta. I think that Santiago's right here. Like, I think with the way we tend to think about it is the developers are upstream of the use cases. So I think Robert's right too. Like, the use cases ultimately are going to drive adoption and drive decentralization, all this stuff. But the developers are upstream of that. Like, if you don't have people building stuff, then you can't have use cases, right? And so that's why we track those developer numbers. And what I think is interesting is when you look at the numbers, you do see pretty robust communities outside of Ethereum and the L2. So Ethereum is by far the biggest, 3 to 10x bigger than the others. But, Cosmos has a really, really healthy ecosystem. And arguably the Cosmos vision of app chains is not that different from an L2 universe, right? Like, in the limit, everybody taking a copy of Optimism because it's open source and running their own sequencers starts to look kind of like an app chain, right? So they're not that different, actually, like, from that lens. Solana has a very robust community. And I think actually it's very possible and likely that these alt L1s, Solana, Near, Cosmos, the ones that have real ecosystems are going to produce applications that can't be made on ETH because the technical constraints breed creativity in a very different way. And so the types of people that come in will think about these things differently, and they'll just invent different things. And so you'll get different flavors of different applications in different places, but I actually think you'll get different kinds of applications. And so these others will actually coexist. So, I think it's also really good, by the way, that they coexist. Like, everything being EVM only could be really bad, right? From like a resiliency perspective. I think it's actually a really good hedge. Like, if you zoom out, right, and set aside the tribalism for a second, like, this stuff exists because a bunch of people have some fundamental beliefs about the way the world should work, right? And like, decentralization of power is one of them. Like, power should not be concentrated because systems that have concentration of power are prone to corruption, and they're not resilient systems, right? And so actually having at the ecosystem level a handful of L1s so that all the power is not concentrated in one place, I think is actually good. I think, and for them to be non-EVM means we've also de-risked technically, which is, from an ecosystem perspective, really, really good from a resilience perspective.
50-50, 80-20, 70-30.
No comment.
You said you generally.
All right,
I think, like, here's the thing. I go ahead, Robert.
All right, I'm 40-60, 40 Ethereum and L2s, 60 other, and that's just as the Ethereum guy. And here's my explanation.
Wow, really?
Yeah.
The Ethereum guy just went. This is going to be clipped. You're going to be memed, and you're going to be the Nick Carter of the Ethereum. You remember what happened to Nick Carter with Bitcoin? The same is going to happen to you in the Ethereum community.
Yeah, they're going to pillar me. Okay, but here's the contrarian take, because I think it's valid. So, as we watch where activity goes, whether it's Ethereum or an L2 or an EVM fork, at the end of the day, all the different chains are offering the same sort of product, which is running the Ethereum virtual machine or a copy of it in some way. And, this is to 𝗙𝗿𝗊𝗆's point, at the end of the day, the activity is going to go to platforms that allow something fundamentally different. And it doesn't matter how many hundreds of different versions of the Ethereum EVM there are. In my mind, it kind of all counts as like one. You get like one type of application. And it's a good application, but it's not great. There's so many problems with the EVM. Both as a developer, it's hard. You get a lot of security risks in the applications that you're actually building on it. We see for years now all sorts of hacks. It's so in terms of building on it. It's the best we have, right? As of today, there's absolutely nothing better, but it's not great long term. I actually don't think that, in 10 years, it's going to be like, oh, let's write this Solidity app and we know all the pitfalls and all the dangers. It's not the end state in my mind of how you actually build decentralized applications. And so I think over time, you're going to have competing L1s that actually differ in terms of what you can build on them at a low level. And I think we're going to get radically different applications. We'll get, zero knowledge, highly privacy aware applications that you couldn't really build well or correctly today. You'll get, different types of things that aren't possible today. It doesn't matter how many EVM copycats there are and forks there are. They're all fundamentally offering the same product. And it's the best product that exists in 2023. Hands down, nothing is better.
Where would you put your because we're in 2023, we need to take bets for the future because we're investors, we're degens. Where would you put your bets right now? Like, is it something that already exists? Is it near? Is it Solana? Is it Cardano? Is it something that we haven't thought about yet? Is it secret protocol with their ZK privacy protocols? What is it?
Yeah, I would be waiting for new blockchains and L1s to go live and that are differentiated and offer something fundamentally different, and investing in them at the earliest point of them being live. It would be my answer. And I'd be actively watching the developments in the space and investing, maybe not the second of new launches, right? Because a lot of times the price performance when things just come out are terrible, right? But I would be eyeballing the new L1 launches with excitement and, learning about them and looking to deploy capital that way.
If I were to ascribe to Robert's thesis, which I think is partially correct, actually, and I'll tell you why, because I just fundamentally think I would express it by investing in killer applications that it perhaps will vertically integrate and launch their own L1. Like, you've already started to see some applications like STEPN. Like, full disclosure, I'm an investor, so no financial advice. This is not an endorsement of STEPN, but if you talk to them, they first launched in Solana and they said, oh, wait, we've just totally crashed Solana. And then they launched some Binance Smart Chain and said, oh, well, that's not going to work. And so if you have a application that is delivering a killer product and is trying to onboard millions of users, we're going to see that over the next 2 years, I think, particularly with Base, which we haven't talked about, which I think is going to create this really nice hand-holding experience for millions of users. And I think that's probably the catalyst that sustains this kind of mini bull run we've seen. But that aside, I think, I think you could probably express Robert's thesis by investing in killer apps that are going to be compelled to then launch their own L1. I mean, it's trivial to launch it. And if you have users, you can really incentivize a nice validator set and create a secure, there's no reason why that wouldn't be feasible. And so I would probably just focus instead because I think the market's sort of fatigued and, another L1. I think that is very much, look, I'm not dismissive of other L1s in existence, but I would be more, I think we're just fundamentally in a different state of the market of crypto where you're starting to get to that point where there are killer applications. And if you have that, the teams, the incentives are very much, let's just launch our own L1 and not be dependent on an existing L1 if you're kind of reaching this bottleneck.
But I think what that misses though, so I think that's partially right. There's definitely incentive for certain kinds of applications. Like STEPN, I think, is a good example of potentially running your own set of validators on Cosmos or an Optimism fork or something, and 𝗙𝗍𝗄𝗏 eventually. But I think one of the killer things here is the composability, right? And that you lose, right, if you're running your own L1. And so everybody being in a shared L2 space or a shared L1 space, to have that composability with finality built in, because all of the transactions sort of settle instantly, like that, you lose that. And that's actually one of the killer new things here, right? That's what makes it different than Web 2 is I can run my own servers, you can run your own servers, but the fact that we actually settle at the same point at the same time on this L1 is actually a pretty killer feature. So that's not to say what you're saying won't happen. I think it's that composability being a killer thing means you get a set of applications that are composable with each other, which is a brand new thing that we didn't have before, which is why actually a bunch of alternative L1s also make sense, is because the way that you actually write the code, the way that you deploy it, the kinds of applications that are possible. If Solana ships FireDancer, Near just shipped this blockchain operating system stuff, which essentially allows you to build decentralized front ends and run the data availability on any back end, any blockchain that you want. I think it's also sort of the other thing to think about here is there's the whole technical dimension to it, and then there are the business incentives that Santiago was talking about, and then there's a third dimension, which is culture. And I think part of what people are doing in these ecosystems is expressing value systems. And we see that in applications kind of in Web 2 in a lightweight way, which is Ron, you were talking about Koreans, right? Like Korea is really interesting because they got into esports super early. They got into messaging super early. They got into mobile payments super early. And because the culture is its own little thing, like Korea is just a fascinating little place. They end up with applications that are different than the rest of the world. So you get things like KakaoTalk, and it's just like, cool, we'll all just use KakaoTalk, and the rest of the world can be using iMessage and WhatsApp. And so I think like the cultural effects are a real network effect here too. And I think there's just going to be like, look at if anybody knows Scott Lewis and the Kanto ecosystem, that's just like a fascinating experiment, right? It's just like, cool, no tokens. Like there's only one token at the L1. Nobody else is allowed to have a token. Like no application can have a token at all. It's just L1. You're like, oh, that's pretty interesting, actually, like as a cultural experiment to say, like, why is everybody, we should, to Santiago's point, there is this incentive structure with tokens. What if we just kill that incentive? And it's like a cultural experiment on top of like an L1, which is essentially using Cosmos SDK, which I think is like, that just opens up the search space so much. And whoever said privacy, big plus one to that too, like baking privacy in at the L1 just allows you to do different things, which means like that thing will exist in parallel to ETH.
From all this, go ahead.
I was just gonna say, like, as a DeFi, like starting in DeFi, I think composability is super important. But to Robert's point, composability is sort of those things that it matters for some applications, but not for others. And if you look at, again, the playbook of 𝗏𝗵, they're starting to build their own marketplace. And so as they build kind of their own ecosystem, composability with other applications is sort of less important, right? You can have the trade-off of latency as you try to settle. If you want to do take your sneakers to Ethereum, well, you're willing to probably wait a few days, right? It's not like, but nonetheless, I take your point on composability. It's an important one.
So you mentioned cultures in blockchains, and I think that, I agree with you. I think Bitcoin is very much about the libertarian culture and, government irresponsibility. And then you've got Ethereum, which I think is like the early decentralization smart contract culture. Who else has a culture? Like Clayton maybe has a culture of Koreans. Like which other blockchains have a culture? Like if I think about, I don't know, Solana, or if I think about Near Protocol,
Cardano.
What's the culture? Cardano has a huge culture. Cardano has, I mean, if you want to talk culture, Cardano beats, I don't know, most of them.
Yeah.
Who else has a culture though? I'm just like, I'm going back to this culture thing because if one of the selling propositions for a chain is the culture of the chain, I kind of want to understand, which other chains have a defined culture, and I think Solana did. I think Solana did. But I don't know if that culture is still there after the whole FTX thing. Like, I don't hear it much about.
I've talked, like, if you look at what Solana is doing, that I find interesting is they're just willing to do things that they're still more centralized as a team. And like the Solana phone, which is set to launch or is launched like today or yesterday, I don't know, it's launching soon. Like that type of innovation, I think, is embedded in their core culture. I interviewed Anatoly, and he's like, look, we've gotten a lot of shit from the ETH community. And initially we were really defensive, and then we've taken that to say, okay, let's improve stuff. And it's actually some of the criticism. And so culturally, I think they've really kind of like, or this kind of very resilient ecosystem, which is why I think it kind of survives this whole FTX debacle. And, and look, ETH went through this moment as well during the DAO hack. And so I think, like, if I were to summarize kind of just as an example, Solana, very resilient culture, and also willing to do stuff that, like, if they nail this Solana phone, I mean, that's a pretty ambitious experiment that, if successful, can really kind of position it to a point where it would, Robert's thesis would, had he invested in Solana at that point, would be, pretty nice outcome. So I'm just, that to me is, I don't know about other L1s. I think candidly, a lot of them are just, we're trying to be a better version of Ethereum, whereas Solana strikes me as, there's Ethereum, but we're just standing our own ground. And so I find that more interesting.
What do you see Aptos as? Like, if you put them into a bucket, how do you see Aptos?
I think, look, full disclosure, I'm an investor, and my prior fund is also an investor in Aptos, so none of this financial advice. But I think the narrative there is, look, there's a team that is launching what was the initial conception and idea at Facebook, and was fairly interesting because they had a ton of really large enterprises wanted to build on a decentralized kind of network. And so it's too early to tell, I think, but over time, if they're successful, then you could envision this as like a more kind of B2B, more corporate friendly. Like if Uber is going to like enter the space in some capacity, well, perhaps you can do it at Aptos, not Ethereum, because they can talk to the Aptos team. They speak their own language, and they're Silicon Valley guys. I don't know.
Yeah, I mean, but then that would make it a very centralized chain. And I mean, the reason why I ask Aptos, I'm just looking at both of them. Solana and Aptos in the same market cap. Like, do you think that Aptos you're an investor? So, I mean, do you think that Aptos justifies the same market cap as Solana? What do you think? I don't know much about Aptos other than what you've just said. It's a bunch of ex-Facebook people where Facebook invested a lot in the R&D. I haven't seen much out of them. I haven't seen much community building. I haven't seen a
they have a fair amount of projects that are building on Aptos. They've been successful in attracting a bunch of projects, and similar to Ethereum, like the DeFi ecosystem in Aptos is, there's a great map that you can link to, but there's a fair amount of projects that are trying to build on Aptos and are actively like deploying it. Mind you, they have a lot of incentives, right? I mean, they raise a ton of capital, no different than Filecoins and like prior kind of other projects. I mean, they have a huge war chest that ultimately, 𝗍𝗗𝗄𝗏, you correct me here, but that is pretty important to attract teams.
Yeah.
Some of which have thought about leaving Solana and this whole kind of debacle, and to say, okay, well, maybe let's deploy in Aptos.
Okay, so Aptos or Solana? Aptos or Solana? Wait, Santiago, Aptos or Solana? You got $100.
Sort of the meme, like, why not both?
Yeah.
In a small, like this sort of thing, like.
If you have $100 and you got to,
let's. I just want to make sure you're referencing the right numbers. You're looking at fully diluted or circulating supply.
The price today, fully diluted versus, well, you've got $100 to invest. You can invest it in Solana at $24.39, or you can invest it in Aptos at $12.40. Where do you put your money if your time horizon is 3 years?
I think as a rational investor, I would never allocate one, or it's like not binary, but. I don't know. I'll plead the fifth.
Oh man. Okay, Robert. What do you?
I'll pick Solana. I'm Solana.
Tell me why.
I think they have more of an operating history, and I think there is still more of a developer base there than on Aptos. And I think any chain when it's young has to go through the trials of hell, and Solana has gone through the trials of hell and hasn't died. And I think that's built up a lot of experience that is a long-term advantage for Solana. And Aptos hasn't gone through that yet. They haven't dealt with the difficulties of actually having live applications. And so I'd pick Solana any day.
𝗍𝗏𝗃?
No comment on the actual allocation. One thing, Ron, you said though is I think really important. It is really important and underappreciated. Which is there's a lot that goes into making an ecosystem successful beyond just the technical innovations. And in some sense, like at a really high level, you do have like the monolithic approach and the modular approach. And the monolithic, you could put Aptos, 𝗏, and Solana into that bucket. And I think from an ecosystem perspective, that's really healthy. Like we actually want multiple approaches to this stuff to have ecosystem level resilience. But it takes a lot more than just shipping the chain to be successful, right? You have to have custodian support. You want MPC wallets. You want institutional fiat on-ramps and off-ramps. You need developer tooling. You need really good documentation. You need the ability for exchanges to list tokens launched by applications on your chain. Like there's all of this other stuff that goes into actually making these things successful as an ecosystem that it takes a long time to build out. And I think a lot of people, because it's infrastructure, people forget how important that stuff is too.
All right, let's. We've got like a few more minutes. Just in the next couple of minutes, I've spoken to you guys about Ethereum and layer 2s, but I'm interested to hear the newer, fresher narratives that you guys are looking at. Like, what are you looking at that's like really caught your attention from an investment point of view? Santiago, I see you're nodding, so you can take this one first.
There must have been a delay. I was nodding. But I'll go first yet again. Well, no, like I've been very vocal about this. I think gaming is going to be a pretty important catalyst to onboard a ton of users. It's fun. I mean, it's important how we define gaming. This is not like, DeFi with a veneer of kind of like a game. No, true killer games. And I think, I'm an investor in a bunch, so I won't name any, but I do think that as a category, I find that pretty interesting. Now, it takes time to build great games that are parity with Web2. And I think what I look at is this, like, would you play this game without any financial incentive? And I think there will again over the next 12, 18 months, you're going to see really fun games with a good experience. Is it going to be 100% like, would you play Zelda versus some other Web3 game? You're probably still going to play both, right? And Zelda's still going to be probably a much better experience. But there are some components that, like, you know, ownership and NFTs that some users will truly value. And I think that's a good enough catalyst to, like, onboard a ton of users. And the second narrative is I'm very encouraged by Coinbase, like Base in particular, like their own kind of fork of optimism. I think that, as when we think about, it's coming at the right time, and generally speaking, you know, they have a massive user base, millions of users, and most of those users need a hand-holding experience, kind of like a safe, like when you think about when the smartphone first launched, like there was nothing there. There was crappy internet, it was super expensive, and there were a few apps that Apple controlled. And I think that similar experience, like, consumer patterns and behaviors don't really change with new paradigms. And so I think in this case, I think Coinbase will do that for the space, where it will onboard and create a very safe Web3 experience and journey for a lot of users. And ultimately that's super positive. And I think their vision is very much aligned in how do we grow the user base and truly Web3 to billions. And you need someone like that to kind of push it forward. And so I'm really encouraged what they're doing. Is it the right design choice of the Optimism fork? TBD, right? But nonetheless, I mean, I think that they'll certainly push the boundary and bring on a bunch of users, and with that, you know, then you're really going to start to understand, you know, do people really like doing this stuff, and the applications that are here are there? Is it enough when you look at retention and strip away kind of the financial incentive, the liquidity mining and whatnot? Like, are people actually spending enough time? And unfortunately, it's been too early to say, because some of these protocols have like 10 core users. Like DeFi as a whole has like 100 power users. So we really haven't seen, like, when we talk about like these applications are really cool, like it's super biased because it's our own echo chambers. So anyways, those two, gaming and Base, I think are my top two kind of narratives that I'm excited about.
Rob, what do you think?
Well, I'll start with what we're really focused on at 𝗏𝗏𝗏 Ventures. And obviously we are investing in the private markets, not the public markets. We don't invest in public assets, but we're really focused on the new emerging power of zero knowledge proofs and technology. You know, it's our primary investment focus right now, is investing in things that will enable new types of applications to get built, either on existing L1s or as new L1s. And we're just really excited as a narrative about zero knowledge proofs. The second thing that, you know, I think is important from a narrative perspective that, you know, is really big is just from the macro perspective. We're, you know, obviously spending a lot of time, you know, looking at just like, you know, where are all assets going? And, you know, I think as a narrative, interest rates are really probably only going to go in one direction from here, which is down. And when it does, you know, I think it's going to be, you know, resetting the game board, so to speak, for a lot of assets, including a lot of crypto assets. And I think, you know, you're going to start to see differentiation between, you know, crypto assets with yield like Ethereum and ones without it like Bitcoin. And I just think that shift back to a zero rate environment is going to just reset how we start to think about assets.
What you're saying is it's all fun and games when you can earn 5% investing in a treasury bond, in a US guaranteed treasury yield. But when interest rates go to zero, you're going to want to get returned, and returns going to come in protocols that find a way to give users real yield on their assets. I think if I were to simplify, is that right? Or maybe
that's
yeah. You said you got 2 minutes, so
I got 2 minutes. I'll give you a bunch that I'm excited about. One, stable coins. I think like a lot of the world wants dollars, and this is like a real use case. And I think we should have trillions of dollars in the world. This is one that the government is actually supportive of. Like they understand the role of the dollar in the world. Two, I think real world assets are really interesting, both things off chain, moving on chain, because this is just better infrastructure to manage them, but also crypto being used productively in the real world. And so stablecoins sort of acting as a bridge. You know, there's a lot of the world that doesn't have access to great financial infrastructure, and the availability of credit and money to flow to those people to create real value in the real world, I think is really valuable. NFTs, we continue to be really excited about, I think as infrastructure and substrate for games, but also like as a game itself. Like NFTs themselves, we just sort of look at as a game being played across Web2 surfaces.
What about AI? Anyone here looking at AI? I mean,
I was just about to say AI. So I think AI is like mostly AI plus crypto is mostly a fad right now. But I think there are two places where it's going to be really, really interesting. Aside from the developer experience of building this stuff, getting way better with AI tools. One is, it turns out crypto is the solution to a lot of problems that AI creates. So like, how can I know if that thing is a deep fake? Well, it turns out I need a cryptographic signature that it was created by a human and the human signed it. How do I know that the person on this other side of this transaction is a human and not some bot? Well, they have a proof of humanity with like some sort of cryptographic signature. And that likely has to live on some decentralized ID system on a decentralized blockchain, because that's the only way all the government agencies can read and write from it. So it turns out crypto solves a bunch of problems created by AI. I also think we've long talked about this. I think it's early for this part of it, but it's going to happen maybe 5 years from now. Is it, AI, the interface for AI into the real world is not going to be a robot. It's just too hard to do mechanical stuff. Like this is 100, this is like 1 million of years of evolution to do this, right? That's really hard. So money is going to be the interface for AI into the real world. And an AI can't walk into a bank and get KYC'd. So an AI has to use decentralized cryptographic money. Like that's the only way for an AI to use money and custody assets. And so AI is paying each other, and AI is paying humans to do stuff in the real world is actually how an AI is going to interface with the real world. And so these things converge in like a 5 to 10 year time horizon. Like AI and crypto just become one thing, because the AI needs crypto, and that's the only way for the AI to do stuff is actually cryptographic money.
Not to mention the veracity of the data, right? You have pure data that can't be tampered with.
All this stuff like converges in 10 years. Totally.
Yeah.
So I think what you're saying is the AI narrative is real, but AI and crypto is going to take a lot longer than we think to become a thing. All right, guys, listen, much love for you guys. It's been a great Friday banter. Nice to see you all. New friends, old friends, thank you so much. Thank you, guys. To the Banter fam, nice to have you guys here. Just to remember that if you, a few things actually, let's talk about a couple of things. Remember, firstly, that I am going to be here over the weekend. I'm probably going to be doing a show. So stay in touch with me on my Twitter at CryptoManRun, because we're probably going to be degening. When the markets are like this, I like to degen with you guys over the weekend. So I see Injective carries carrying on. Let's just quickly see what's going on here. So you've got Injective 842. All right, so I think we will be on the weekend. We will do a show. So get me on Twitter. Also, remember, very important. Help us support NordVPN. If you don't have a VPN, if you're surfing if you're not surfing anonymously, you want to be surfing anonymously. I didn't want to say it when our guests were here, but you know that the SEC is sending letters to decentralized protocols to ask them for user data. Do you want your IP address in the data? Absolutely no, you don't want that. For $3 a month, you can be anonymous, and at the same time, you're supporting one of our sponsors, which brings you the Friday Banters. All right, so what if you do have a VPN? Well, then NordVPN have got a whole lot of other products, including this 𝗙𝗵𝗲𝗃 product, which is a product that makes you anonymous online. Basically, like when there's data thefts and stuff like that, and they use your information to do shit. Well, this product gets you off those databases and keeps you basically clear offline. So if you're not signed up, go to the referral link below, sign up, help us support the sponsors. They are the crypto sponsors. They do bring us this, help us bring you guys this amazing content. Otherwise, I will see you guys again on the weekend. And hopefully this bull run continues. So until then, trade well, my friends.